Probably the most important stock market indicator is the VIX. We all track the VIX each and every day. Some of us actually trade the VIX on occasion, and the VIX is a weird product. And today I wanted to talk to you guys about the 3 states of VIX. So basically how the VIX moves up and down, how it tends to behave. And that behavior, because it's so unique, will kind of change possibly your thinking a little bit, especially those of you that trade options. So the 3 states of VIX. So we're talking about expansion, contraction, and lull. And you often hear about this when we're talking about volatility. We're talking about volatility expanding, rising, and we're talking about it contracting, which is falling. And a lull state, as the name implies, is when it's just not really doing much at all. Now, if you're new to trading and investing, you may or may not really know what VIX is. The VIX is often referred to as the fear index. It's an index product. All it is, it tracks the volatility of the S&P 500 index. If you go and look at the monthly implied volatility of the SPX, you'll notice that number is also VIX, right? So VIX is just the implied volatility of the SPX. Now, because the SPX, the S&P 500 index, is a great representation of what the overall stock market is doing, if it has high volatility, that means typically something's wrong. There's a little bit of fear and uncertainty in the market. Now, if VIX is kind of low, which it typically is most of the time, that means, hey, it's smooth sailing ahead, things are calm, the market's probably just doing its usual thing, stair-stepping up slowly and slowly. Now, if VIX is very high, it probably means the market is in turmoil. It could mean the market has recently crashed. It could mean that we're in a lengthy bear market, and that's why traders, we will often look at VIX each and every day, sometimes multiple times a day. I want to know if volatility is expanding or contracting in the S&P 500. Options traders, we use VIX to give us a general idea of whether volatility is high or low in the overall market. And the reason we want to know if volatility is high or low is because that will change how we trade options. It will change the strategies we employ. For example, option sellers, we love to sell options when VIX is high, because when VIX is high, premiums are high. And if you're going to sell an option, you want to sell it when the price is high, right? You want to sell it when the price is high, and you want to buy it back to close when the price is low. That's how you're going to profit, right? You sell high and buy low. So option sellers love to sell options when VIX is high in an attempt to profit from a potential volatility contraction. When vol comes down, I make money as an option seller. I think most of us probably understand that, right? We understand if you sell options, you make money when VIX is contracting. If you're buying options, you're going to make money if volatility expands. But how often is the VIX contracting? How often is it expanding? Well, let's talk about it. So VIX has 3 states. We have expansion, contraction, and the lull state. Now, VIX is in that lull state about 70% of the time, making it the most common state that VIX is in, right? So 70% of the time, VIX is in a lull state. It's not really moving around too much. That's when VIX is kind of hanging out near its average range. It may rise a bit, it may fall a bit, but it isn't making any drastic moves. Expansion is usually what we think about when we think about VIX. When we think about volatility, we think about volatility exploding, right? We think about vol explosions, and that happens when the market is in serious turmoil. That expansion is quick, it's violent, right? And sometimes you can get hurt because of that volatility expansion. So VIX is only in expansion about 10% of the time. Now, what happens when volatility has that sudden, that dramatic expansion? When VIX all of a sudden goes higher, what happens right after that? Well, typically, you get the contraction, right? You're going to get the contraction. And that's usually that sharp fall that happens in volatility. Once fear from whatever the turmoil was, once that fear subsides, you're going to get a sharp fall, that contraction of volatility. Now, here's the thing. The expansion is much quicker than the contraction. Both are pretty fast, but, the contraction usually takes about twice as long as the expansion. Thus, VIX is in expansion 10% of the time, but it's in contraction about 20% of the time because the contraction just takes a little longer. It's not quite as drastic and dramatic as the expansion. So now that we know the percentages, lull state 70%, expansion 10%, contraction 20%, what can we take away from that, right? What have we learned from this? Well, I think one of the things we've learned is that if VIX is in a lull state 70% of the time, it's contracting 20% of the time, and it's expanding 10% of the time, that means 90% of the time volatility is not expanding, right? Because 70% of the time it's in a lull state, 20% of the time it's contracting. That's 90% of the time. 90% of the time volatility is not expanding in the market. I hope now everyone can see why so many traders, including myself, tend to prefer selling options rather than buying them, because short options benefit from volatility contracting. Long options benefit from volatility expanding. Well, if volatility is only expanding 10% of the time, and 90% of the time it's not expanding, yeah, I probably want to be doing the short options rather than the long options. If you're playing for volatility, you certainly want to be on the short side of the trade. Short option strategies are negative Vega strategies, right? And these negative Vega strategies, they're great in that 20% of the time that the volatility is contracting. Now, wait. 20% of the time, you might say, hey, that's not very good. And that's true. Only 20% of the time, volatility is contracting. So your negative Vega strategies, 80% of the time, you may think, well, that's not really working. Yeah, but what's your positive Vega strategies doing? They're only working 10% of the time, right? Remember, volatility is only expanding 10% of the time, so it's contracting only 20% of the time, but that's still twice as much as that measly 10% of the time that vol is expanding. Now, there's more to the story than just that, though, because most negative Vega plays, so your short options plays, they're typically you selling out of the money options. You're selling out of the money puts. You're selling out of the money calls, out of the money strangles, out of the money credit spreads, out of the money iron condors, really high probability trades. That these kinds of trades, they're just fine in that 70% lull state too. So 70% of the time when the VIX is in that lull state, your short option strategies still are okay. They're not benefiting from Vega, but they're okay in that lull state where you're positive Vega plays, so your long premium option strategies, they actually lose in the lull state because they're not benefiting from Vega, but you have to have the movement right on a long options play. So you have to get direction right? You must get direction right on a long option strategy. And if you don't get the direction right, well, you don't have Vega to fall back on because you're not making anything on Vega either, because remember, you're only expanding 10% of the time. So long options trades versus short options trades, again, if you're thinking about it in terms of selling volatility versus buying volatility, I would say that you're better off, more than twice better off, selling options rather than buying options if you're thinking about it in terms of selling volatility. Now, if you haven't already, please check out my book, The Super Wheel Option Strategy, which is available on Amazon. This book, it's about my favorite option strategy, which is the wheel option strategy. You'll find a link to the book in the description below. Also, if you want to help support my work, please consider subscribing to the DT Options Discord server. I hold a live voice chat there each and every trading day. I share my trading platform. You guys get to see all the opening and closing trades I make each and every morning. And we've got a nice little community over there, and we'd love to have you as well. Peace, guys.